Good morning for this Monday, June 18th. Hope everyone had a fantastic weekend. I am looking at the stock ARMH. ARMH. All right, if you recall, we went long this stock last week at a price of $40.60. I went long at $40.60. This is a tight little trading range in here. And as the market started breaking up through that range, I waited for the market to come down a little bit and got filled at a price of $40.60. As you can see, the market's gapped lower. So unfortunately, look at it must have had some earnings. I'm not exactly sure what happened, but what I'm seeing here is look at the markets at the 200 exponential moving average. Since it trades during the day session only. And I did not have a resting sell stop coming into the day. It did not take me out at the opening. So this is how I'm going to manage that trade, because as you recall on Friday, my stop was below this little ledge low here. Stop was sitting at $39.80. Well, the market gapped lower today, as you can visibly see here, quite a bit lower. Again, it did not have a resting sell stop coming into the day, so it didn't take me out. So I'm going to look at an intraday chart and look to see where would be logical to stop myself out. Now, granted, holding on to a losing trade isn't the thing to do, but since I was not knocked out, we're at the 200 exponential moving average still. And if you take a look at this trend, okay, take a look at this trend. Okay, market's obviously up big time from these lows. This low, market's just pretty much straight up. So if you were to draw your Fibonacci retracements, right, from this low up to the high where it peaked out, okay, let's see, take a look at this. We are sitting, look at this, the 38.2% retracement from this lowest low down in here up to the highest high here. Look at 38.2 is right there. This is the 50 mark right here, 50%er, right, as you can see it right here. And the market's trading right on that 200 exponential moving average. So I'm going to flip it to a 3-minute, or if I'm going to go, let's look at a 5-minute chart real quick. Take a look at the 5-minute chart. Again, big gap. Okay, I'm long this market. What I'm going to do is I'm going to stick my stop. What I'm going to do is I'm going to go ahead and stick my stop below these double lows right here. You see that? So I'm just going to call myself out. If the market reverses at this point, takes out these double lows of 38.73, I go 10 cents below that. We had 3 inside bars. Look at one. We got the first one, and the following bar was inside of the prior bar, and then we had an inside bar here. We broke up through it. So we'll see if this market can challenge the high of the day and try to fill that gap. Okay, look at what 38.97 now, pushing higher. If you were day trading the stock, the trade would have been going long at 38.85-ish. There's a breakthrough here with a stop below these lows. Again, the stop now is going to be at $38.63, 38.63. So if I'm knocked out of this trade today, I would take a 2-point loss, rather, a little shy of a 2-point loss on this. Again, going back to a daily chart definitely surprised me a little bit with the gap opening. So now we're at 38.99. Again, 200 exponential moving average. I'm going to give this a little bit more room to breathe. Look at this market is rallying now. Look at 39.06. Let's flip it back to a 5-minute chart. Look at that rally. We've just taken out the high of the day. Look at 39.10. So we are rallying a little bit. Again, I saw that open this morning. I'm like, God, what happened here? Little surprised, but hey, not bad though. If you take a look at the daily chart, it's not a bad thing. We're trading between the 38 and 50% retracement of the bigger move. We're at the 200 exponential moving average, where I would expect some type of support to come into play, and we're gonna manage this a little bit here. So let's take a look at something else. All right, looking at TBT. TBT is pretty much unchanged, even though the overall market's up considerably today. Pretty much unchanged. Again, as you recall, I am long this market right down in here between the bands, the mid to the lower. Just a little bit up in here, but the average price is still easily right up in here, $66.50. We're trading at 68.36. Again, this is a longer-term interest rate play. The market took out this high, which is a yearly high here. Just, granted briefly, but still, I'm thinking interest rates are going to be moving up off these levels here. I don't know exactly when. No one knows, but again, it's all a probability game, and I am looking to position myself in this market. Let's take a look at the overall market. All right, look at the overall market. The E-mini S&P 500 has opened up. Look at this. This is where it closed on Friday, near the low of the day, right here. 1618. Look at where it opened up. 1631.5 right in here. Shot up. We've taken out Friday's high right here, and we're pushing higher. If you take a look at the daily chart, look at we've pushed up through these highs, all through these highs. Next level we're looking at is 1642.5, 1642.5 right here. We start breaking up through 1642.5. I think we're going to go a bit higher. Let's measure these numbers from the all-time high down to this low. We've broken up through that 50% retracement. Next level would be the 61.8 at 1646 and change right here. But you'd have to first clear up through the high put in place on June 10th, the high of 1642.5. Then the next level would be the 61.8 at 1646 even. So hope you have a profitable day, and I'll be back with you tomorrow. Bye for now.